Hey, what's going on everybody? Welcome back to another video. We're looking at a 4-hour chart. We're going to talk a little about EURUSD today, what it did this past week, and the target it actually had. My previous two videos have been about targeting previous highs and lows. We're actually going to target something different. On this video, we're actually going to target two lows that were actually formed about 2 weeks ago. I think, matter of fact, I think it was like mid-July, in between the 16th and the 17th. There's two lows that were formed, and that's what we're gonna talk about in this video. So let's go ahead and get started. I hope you guys enjoy this one. Alright, so we're looking at a 4-hour chart here. This week I wasn't really expecting too much from EURUSD, but I mean, we did have a pretty solid down week. The actual best day to trade was once again Tuesday. I've mentioned previously that Tuesdays and Wednesdays are actually my favorite days to trade, and one of the reasons why is because to me they have the most movements. A lot of news events comes out on Wednesdays. So what we got here, I'll show you guys why Tuesday was actually the best day to trade this week, or at least I think to me, or the type of setups that I actually look for. I felt like Tuesday was the only one that actually gave me a setup using my strategies. Unfortunately, the entry was mostly during the London session, and I don't trade London. I wasn't awake at the time because, you know, same reason. I just don't trade London. I'm on Central Standard Time in the US, so I'm not gonna be up like searching for setups during the London session. But yeah, we pretty much saw a nice downtrend on Tuesday right after the London session started. So Tuesday, personally wanted to trade Tuesday. I felt like Tuesday was the best day to trade this week. We saw EURUSD take out July's low that was actually formed on the 16th, and then Friday during NFP or non-farm payrolls, there was a new low that was made for EURUSD, and that actually ended up being the euro dollar low for the month. So I have highlighted here July low. We also got sell side liquidity in there plus equal lows. I didn't have that highlighted in my last video, but it was actually a target for me ever since this form. We got these two lows here, and then we started seeing this nice uptrend. Here are my two fib entries from the last video, circled here in blue. After that, we pretty much just consolidated, and then when we started off this week, we immediately started down trading, targeting both of July's lows, which they are actually equal lows. So on the 29th, we got this little entry here during the London session, right after those lows get taken out. I wasn't really too confident about it because we were at a fair value gap already. The lows had already been swept, but we were almost like halfway into that 4-hour fair value gap. So I wasn't too confident about this trade because I didn't know if it's either gonna just fill out that 4-hour fair value gap at a 50%, or if it's gonna retrace back into that same level and then drop back down. So that's exactly what happened here. I'm gonna shift this down into a 1-hour chart so it's a little clear. So this is Monday. This is Asian range for Monday. Market opens and immediately trades down into that fair value gap. I'll zoom out a little, and this is actually the move that took out the equal lows. So we already have a liquidity sweep right here. So at this point, I'm not sure if the market was going to keep trading down lower, or if it's just going to consolidate, or, you know, just go bullish. We have a little retracement going up, and it goes back into that same Asian range. We got these two wicks here, and keep in mind, I don't use wicks, I use bodies of the candles. So I'm just going to zoom in on this a little bit, and we're actually going to take our fib tool. We're going to take the fib tool from the Asian range this time until that first low that was actually created during London session or London open. So what we got here is we actually got a 70% entry level here. The market pretty much retraces back into the 70% retracement level. And keep in mind, I don't use wicks, I use bodies. Look how the two bodies of these candles are like exactly at the 70% retracement level. This actually indicates that, you know, the market still had a little more downside to it, and this actually would have been a good setup during the London session right here. We ended up trading about 60 to 67 pips. That would have actually been the day for me, because I try only to look for 15 to 30 pips. I try to stay within like a 20 pip target every day. So we ended up just moving down into that fair value gap. At this point, I didn't know what was going to happen. I didn't know if it was just going to fill the fair value gap right there and just consolidate until Friday, because Friday we had non-farm payrolls. But then on Wednesday, market opened up again, and now we really saw a down move. We got about 100 pips on Wednesday. This was in the afternoon. Market kind of fills in that fair value gap that was created during New York Open, trades down another 100 pips during the Fed interest rate decision. This was actually a news event here. I don't trade news events. I actually like to stay out, although I did catch some of this move on Friday during non-farm payroll. I actually went bullish on this move and got a few pips out of it. But usually when it comes to like Fed interest rate decisions and all that during midweek, you know, the market just goes crazy. So I like to stay out of it. I'd rather go in moves like this. Like I said, I only look for about 20 to 30 pips per day. So I'd rather get a move like this one that we had on Tuesday. Unfortunately, I was not awake during London session, so I could not get this one. On Wednesday, I knew Fed rates were coming out, so I wasn't going to trade those high impact news events. So Wednesday, I just took the day off. Usually, if we have a high impact news on Wednesdays and then high impact news on Fridays, Thursday would be sloppy. So we only got 50 pips on Thursday during the entire range on Thursday. No setups, nothing really to look for. It was just sloppy. And then on Fridays, like I've mentioned previously, I don't usually trade Thursdays or Fridays, but on Friday, you know, after having such a down week, non-farm payroll came out, and you know, it just traded down a little bit and then just traded back up. I saw the bullish move, so I was like, okay, I'd go in there. It wasn't actually a setup, just felt like going in the market for a little. I placed a tight stop loss and a tight take profit. Good thing it hit my profit target. I didn't get too much out of it. I wasn't gonna ride that entire move. It's just too risky. My lot size went down also, just not to risk my account during these news events. I highly do not recommend it. So you know, just stay out if you can. Alright, so just going back to what the video for today is about, it's about equal lows. So we got July's lows here once again. Now we're looking at a 1 hour chart. I usually like to stay on the 4 hour chart, and then I like to do my entries on the 15-minute chart. I started to use the 4 hour chart more often ever since I started seeing better results using the 4 hour chart and just kind of staying off the 1 hour chart and staying off the 15-minute chart, unless it's just to enter the market. But for directional and bias purpose, I like to use daily and the 4 hour chart, mostly the 4 hour chart. Daily, I just like to go in there every day to see what's going on, but I usually try to follow more the 4 hour chart. As far as my market bias goes, I don't really have one right now. We just had non-farm payrolls on Friday, and it's also the start of a new month. Monday is most likely going to be sideways, so we would actually have to wait until Tuesday to see what the market wants to do. We filled in the 4 hour fair value gap, which is this one right here, but we also have one, and I'll switch back to the 4 hour chart. We also have one down here around the 1.1300 area. There's also a fair value gap in that price range. So if for some reason we keep going lower, this is actually going to be my target. Anything from 1.1325 to 1.1300 is pretty much going to be my target if we continue going lower. I actually don't know what's going to happen right now because, you know, it's the start of a new week. We just came from non-farm payrolls. We just had a week with a lot of movement, so we might actually have to take this one out as well. The market seems to like to go into a range after a big trading week, so we might see a lot of sloppiness this week, and then the week after we might have like a more clear market direction, see where the market want to go. But for now, we got a lot of gaps here. We got one right here. Let me just highlight. I'll highlight it in blue for now. We got one there, and if you see, the market actually traded there, and that's it. So we haven't filled that one. I'll duplicate this one because we got another one up here. So we got a few gaps. We want to see if the market actually wants to fill this one. It'd be this first one right here. If it fills this one and trades down, then we'll have to look at the gap for Friday, which is this one right here. This is I don't like to call these fair value gaps because it's just a bigger gap, so my mentor used to call them liquidity voids. We'd have to see what the market wants to do there, but if we do see anything that indicates us that we're going down, I like to target this one down here because we also have sell side liquidity here. We got sell side liquidity there, and right under it we got a fair value gap. So that's where I like to see Euro USD go if we continue this down move. Alright, so that's pretty much all I have for today. Thanks a lot for watching. I'll see you guys on the next video. Hit me up in the comments.